Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the markets, the euphoria continues. On our slow days, it's just slow bull buying. And on our big days, it's responses to headlines of China and the US getting closer and closer to a trade deal. The biggest short-term risk to the market, in my opinion, would be some kind of complete 180 turnaround where China was intentionally, in my opinion, it would have to be intentionally misleading that a deal was about to be taking place, and then just turn right around and do some kind of retaliatory escalation kind of move. If we do get a deal, whether it's a big deal or a small initial deal, whatever it is, that will be a bit of justification for the bulls to the market, and I won't expect any huge follow through because right now the market is pricing in some kind of deal taking place. So if that deal takes place to market expectations, it will already be priced in. I don't think it'll be a massive sell the news scenario, but again, whenever we see this kind of move, definitely want to remain with a bullish mindset, but also want to be cautious. We don't want to be lulled into a sense of complacency as bulls, thinking the market's just going to go up forever, because we know that weekly consolidation is going to be due at any point, and when it does come, it can very easily just be a healthy weekly higher low. At this point, we would need massive bear volume, in my opinion, if we were going to see a loss of the weekly higher low. All we're doing is just creating more and more space where the bulls can consolidate and maintain this uptrend. The market right now can pull back over 8% and still be in a weekly uptrend. So congrats to the bulls. Gap up open, strong close, little surge at the end of the day, and some bull volume, which is notable as well. We don't usually see more than average volume on a gap up open bull day, but we did today, or did on Friday, I should say. So if you're looking at these little incremental daily higher lows, again, the most important level for me was the low of last week. That held, obviously. Another higher low just above 307. Another higher low at 307.66. Anything above 307.66 is just a higher low. The bulls have over $4 of space where we can pull back and maintain the daily uptrend. So bulls are strong. Hourly time frame, we're just going to be looking for an hourly higher low to form on consolidation. Short-term support, 311.08. And it looks like a lot of that volume came in at the close. So that volume may be a bit misleading, although that's probably shares settling from earlier in the day. So let's move on. What we've seen, my observations, is a tag team action. Again, it's just cycling where we'll have the tech sector be strong for a few days, and then it will see some brief consolidation. The financial sector will take over. So the most recent bull move, the last couple days ending this week, was tech sector and healthcare sector, the number 1 and number 3 largest holdings in the S&P 500, being very strong, and the financial sector not really participating significantly. The financial sector is holding on just fine with very healthy consolidation we'll look at in just a second, but it wasn't the reason for this new push to all-time highs that we saw on Friday. IWM is also in the same boat as XLF. Very healthy consolidation. We are in technically a little daily downtrend, but it's the kind of daily downtrend where the bears are not getting any follow through, which is when we zoom out and look for a potential bull flag. So the weekly time frame is a potential bull flag. Again, it's the only major market that we're looking at that has started its weekly consolidation as we broke the low of last week. This week, nobody else that we're looking at did that. And the question now is this a bull flag? Can we see a new leg up? And if IWM can break 161.11, that's another surge higher. That's pretty much a little quadruple top. And right now I'm looking at the market and saying, okay, where's the next move up going to come from? And it could be IWM and XLF is what I'm going to be watching this coming week. So IWM bulls would have to see a break of the little daily lower highs. I've got resistance at 160.46. I've got resistance 160.17, 159.88. Anything under 159.88 is just a lower high. 4-hour time frame shows those lower highs fairly clearly, and bulls have to break those if we're going to be looking at the weekly bull flag to try and confirm. QQQ, so there's our reason for the strength. Gap up open to all-time highs, close up at the high, Slight increase in bull volume 4 days in a row. Anything above 222 cents is a daily high or low. And again, bulls have tons of space to consolidate on the weekly time frame and maintain the uptrend over 10%. Remember this pullback here, we remained bullish in this market on this weekly consolidation because it was just a weekly high or low, which is the mindset that we will have the next time we pull back on the weekly chart. We will anticipate weekly high or lows. The only thing that will change my mindset on that is massive bear volume. XLF, so again, very healthy consolidation, but not the reason that we saw that strength at the end of this week. So if we see XLF and IWM follow through this coming week, that can be the momentum to continue the S&P 500 and the Dow's march higher into all-time highs. Short-term key support is 29.45, resistance is 29.89 and 30.03. Again, have not started that weekly consolidation. It's just a weekly inside bar, which the bulls will try and break bullish this coming week to be the new fuel. Who's the new fuel for the market to keep this move going? And we're going to watch to see if XLF is going to take a turn. XLV, we had been highlighting the 4-hour cup and handle, and boy, you can't have a better breakout than we saw. So we have resistance at 95.67. Here's our cup of consolidation. Failure to break resistance, healthy pullback in a bull flag, and then big volume breakout. So a nice little cup and handle. I like cup and handle as continuation patterns in already strong uptrends. It just shows the bulls losing their momentum. You have bulls taking profit due to the inability to break resistance and bears jumping in due to the inability to break resistance. And then that's just fuel for continuation when we do get that break. So look at the daily time frame for XLV. Again, third largest holding in the S&P 500. Huge surge higher. And looking at the weekly chart, did we get that all-time high? We did. So new all-time highs in XLV. Weekly inside bar bull break. And again, how much can we consolidate and maintain a weekly high or low at this point? And the answer is a whole bunch, over 10%. XBI, right up at the high, 84.93 is the highest price we've seen here. So just under that level, short-term support will be 83.02. And if the bulls can break 84.93, we zoom out to the weekly chart after 84.93. I'm looking at 85.05 and 87.70. And again, we haven't changed the weekly trend here, and we haven't on XLV either. This is a massive move with no weekly higher low and higher high. It's coming off of a weekly lower high and lower low. XBI will still need a weekly higher low and higher high to confirm a weekly uptrend, but obviously a massive move. And again, tons of space to form a weekly higher low if we need to consolidate, 14%. And the VIX is dropping down to our recent low. We did break 1220 and we dropped down to 1190. So we're looking at 1170 and $11 as the lowest prices we have seen since last time we were lower than 11 was back in August. So pretty much just over a year if we drop down to that $11 level. And looking at the 4-hour time frame, we've been keeping an eye on the falling wedge support line. I don't like the falling wedge at this point because of the resistance and how that broke with no real follow through. So I'm pretty much giving up on the falling wedge for the VIX. And like I said recently in a video, I'll be interested in the VIX when we see both the tech and financial sector pulling back at the same time, because when we have just one pulling back and the other holding on just fine, that's when we get this tag team bull action. So we're also going to look at ROKU, Work, and BYND here in this video, 3 individual names, and we're going to look at commodities in their own video. But ROKU has been on absolute fire since a bearish reaction to earnings. Just 6 days in a row of a massive bull move. And just like that, we're looking back at all-time highs. There's a little gap to fill at 159.80, which has not filled yet, and then all-time high right after that. So there is a potential top fishing play with that all-time high. I know people have been looking bearish the past few days, and as long as you're keeping your risk small and trying to position yourself in a break-even stop or a small stop loss, then there's nothing wrong with that, because when we do pull back, it will be a solid multiple percent pullback. But at this point, there's no sign of it. The hourly uptrend is our guide. Look at the 12-period hourly support. 12-period exponential hourly support over the last 5 days. That's my visual guide. When we lose that level, it'll be notable to me, and that may be a top fishing entry. And what I mean by top fish is if we have a high of 158.23 and we pull back, and then if we see a bull move back up to that resistance, if I enter bearish at 157.99 and put my stop above 158.23, I'm risking about 28 to 30 cents of a loss if I get stopped out and we continue. And if I'm correct and we top out and then see daily consolidation begin, there's multiple dollars of potential reward. So that's when you keep the risk to reward, and your risk is 28 cents and your reward is potentially $2. That's the kind of risk to reward scenario you want to be putting yourself in. But of course, you don't want to be continuously fighting the trend. So I have tried a couple times this past week to go bearish, not many, but I will be keeping an eye on it. Keeping in mind that when we do top out, we will just be looking for a daily higher low to form, as the bulls have tons of space for that daily higher low to form. And there's a lot of hype around this TV space with Disney and their recent run to all-time highs and their news. So that's adding some fuel to the Roku fire, in my opinion, as well. Work. So I'm interested in work as it is coming off the all-time low. And it's a very massive bounce off this all-time low. And 23.27 is the most important resistance level for me. What I would like to see in the most ideal scenario, if this trade is going to come to me, and if I'm going to be patient and take this trade, I want to see rejection from 23.27, which would then give us an inverse head and shoulders setup. If we reject from 23.27, we have plenty of space for a daily higher low to form compared to the all-time low of 19.53. I would look to scale in for the daily higher low and then look for the daily trend change for the first time in a while, which would be a bounce off of that all-time low. So it's all about 23.27. The odds of breaking 23.27 are definitely there for the bulls. The biggest reason, increasing bull volume the last few days. So gaining strength and momentum as we head to that level. And if we're going to reject from it, I would need to see a loss of the hourly uptrend. Anything above 21.47 is an hourly higher low. So the bulls absolutely have a chance to break that resistance. And you better believe that after the size of this bounce, we will be seeing bulls looking to buy the dip on that daily higher low. So that does have my attention, and it's also a falling wedge on the daily chart here. We've already broken bullish from it, but it was something we were keeping an eye on. Just lower highs and lower lows, but every lower low getting less and less follow through as the bears tire and lose their momentum. So a nice little shift on work. BYND, we're watching for something similar. So BYND, say everything you want bearish about it, that's just fine. But when you pull back this much from the all-time high, but you're still holding the all-time low, 69% pullback, I'm looking for a monthly equilibrium. I'm looking for a low, high, scouting a monthly high or low, and I expect that when that bottom is hit and when that momentum shifts, I forget what I've said in the recent past to our members, but I expect a fairly easy 50% move from the bottom. The question is, have we hit our bottom yet? And I don't have that answer just yet, but I'm watching for it. So keeping an eye out for the monthly equilibrium. Step number one is change the daily trend. And right now, anything under 85 is just a daily lower high. What I would want to see is a little pullback here to hold the low of 73.85 and then a daily trend change from there. So daily lower high, hold the low, change the daily trend. And again, when's the last time we've changed the daily trend on BYND? The answer is we have not seen a higher low and higher high since back here in the mid 150s or so. So it's been a very long time, and that's something we're going to keep an eye out for, a short-term shift. But again, just positioning ourselves, I'd like to see the price pull back to 77. Then I can make an entry, put a stop under 73.85, and watch for that shift to take place. So something I'm keeping an eye on. We had a 4-hour falling wedge. Falling wedges are great when you're looking for signals that the bears are losing their momentum. And this wasn't a very emphatic bull break of this falling wedge, but definitely a little shift. And the question now is, can the bulls change the daily trend? So again, contained in this range, lower highs, lower lows, bull break, which means zoom out to the daily. Can we change the daily trend? And that's the question we're going to be looking to get answered this coming week. So again, just a couple names that I have my eyes on, and when I say wait for the trade to come to me, it's the kind of thing where I have so many trading instruments out there, whether it's leveraged ETFs based on commodities, individual stocks, individual sectors, the MJ sector, whatever it is, that I am perfectly fine missing trades. So for work here, if work does not reject around 23 and pull back and give me a daily higher low to enter on, and work just runs to 26 and beyond, that's great for the bulls. I missed an entry, no biggie. Move on to the next trade. The trade did not come to me. It did not give me a setup that I like, and I have no problem completely brushing that off and moving on to the next trade, because I know that there are thousands of trading instruments out there, and there's always another trade setup to be keeping an eye out for. Hope you're well. Have a good weekend. We'll check back in this week and see if the bull party can continue. And do good things.